Hello and welcome to Canaccord Wealth Management. I'm Stephen Jones, an Executive Director within our Wealth Management team. And today I'm joined by Tassos Stassopoulos, the MD and CIO of Trinetra. Tassos, welcome.
Thank you very much.
Developed economies have delivered double-digit returns as a new wave of industrialisation and disruption have grown the modern consumer into a spending powerhouse. iPhones every year, a drone that can follow you whilst mountain biking, food and car sharing at the click of a button have all served to make a lot of people a lot of money. As history will tell us, a number of these elements pass down and flow into emerging markets, Sri Lanka, India, China, to name but a few. Over the next few minutes, we're going to answer the question why emerging markets must become a part of your portfolio. So Tassos, why emerging markets?
Thanks very much, Stephen. In your introduction, you mentioned how in the developed world, we're all buying iPhones and we're buying the next drone. But if you look at the absolute numbers of consumption, they get completely dwarfed when we compare them to what is happening to domestic consumption in emerging markets. The domestic consumption in emerging markets is a 35 trillion opportunity over the next 15 years. There is no opportunity of this magnitude in any theme anywhere else in the world. This is a story that we all know very well. It's a story of our parents, of our grandparents, how people urbanized, industrialized, and their hopes and dreams for a better future for them and their families translated into better education, consumer products, holidays. The difficulty is not identifying the theme. Everybody knows about it, everybody is talking about it. The difficulty is how do you access it? If you try to go down the benchmark and buy an ETF or an index, you end up with all the success stories of yesterday. You're already buying the stories that have done well. Similarly, a purely top-down approach relies on lots of government statistics, and the government statistics are completely flawed in emerging markets. For example, if you look at female participation rates in India, we see that they keep going down, but we know that's wrong because the statistics are missing this invisible army of these female homepreneurs who are setting up businesses from home and actually driving the GDP of this country. And the biggest problems, I believe, in chasing this theme when you're a developed market investor is what we term projection bias, believing that these people in emerging markets want whatever we want. We want an iPhone, they will want an iPhone. And when you do spend time on the ground with these consumers, you will realize that not only these people will not always follow our trends, but they will set trends that we are likely to follow in the developed world.
So there's a lot of emerging market operators and fund managers out there. What makes Trinetra different?
We follow the traditional approach like everybody else, and there is a defining moment in time that everything changed for the way we invest. In February 2009, I met the CEO of an Indian ethnographic research firm who was a psychologist with a social anthropology background. And she had never met an investor before, so she asked me to explain what I did. When I ran through my process, she said it was interesting, but it was incomplete. She said that I had two eyes. One was looking top down and the other one bottom up. But if I wanted to invest for the long term, I needed to open a third eye. And with that, see real people. Because ultimately, people dictate the trends, not companies. And she believed that while I had a process to value companies within the context of the country's current statistical data, I had no process to identify longer-term trends that shapes not only the markets, but societies within these countries. So if you look at us, what we have done is we are a team that used to work together at Alliance Bernstein. We have created Trinetra with a sole purpose of understanding these consumers. And even our name Trinetra stands for third eye, the third eye of Lord Shiva, which basically seeks to gain insight, have sight beyond ordinary sight.
Is there a defined process that you could summarise for us at the top?
Yeah, I mean, the traditional approaches just focuses on companies. And if consumers dictate the trends and companies try to predict it and get it right or wrong, a lot of the times the companies will get it wrong, and you will get it wrong every time a company does that. So we believe that at the core, you have to have the consumer. That means that you have to get on the road and visit consumers in their homes to understand their hopes, their dreams, their aspirations. But still, when you do this in-depth ethnographic work that sees us travel through all these villages and towns, consumers can only tell you about their consumption today. And to understand their consumption tomorrow, you'll also have to understand shifts in culture within these countries.
So understanding the consumers, the culture and the consumption levels.
The three Cs.
The 3 Cs. Terrific. Is there some thematics that you're currently looking at? If you look to 2019 and beyond, what's catching your third eye?
Well, for us, the way we look at the portfolio, there is 7 very powerful themes that run through it. For example, everybody talks to you about the rising middle classes, but we are most bullish about the people at the bottom of the pyramid. These are the guys who are seeing the biggest changes in their lives and the chance to pull themselves and their children out of poverty. Migration, it's a bit of a negative term in the developed world, but actually these are the most driven people at the bottom of the pyramid. One of the strongest themes we have is actually the theme of women empowerment, which has to do, we call it women effect. And we are seeing that fintech actually is empowering a lot of these entrepreneurs to create these flourishing businesses in emerging markets.
Is there an example company that you can share with us that's currently in the portfolio?
Okay, if you look thematically, what people have been talking about China, they talk about this epidemic of obesity that would have hit the country, and there's lots of books that have been written about it. And if you read these books, then investing in China is quite simple. Just invest in all the stuff that's going to make them fat, the sweets, the fast food, and then make sure you invest in insulin as well for all the diabetes they're gonna have to deal with. But in 2011, we started a series of ethnographic studies through China. We visited Inner Mongolia and traveled westwards. We went to central China, went to central east. And in these various ethnographic studies, what we found was that this perception was wrong. And I talked earlier about projection bias. And just because in the United States they have an obesity epidemic and everybody tells you that 61% of Americans are either overweight or obese, it doesn't mean that the Chinese will follow the same steps. The Japanese haven't. The Koreans haven't. Why are we assuming the Chinese would? And what surprised us when we started visiting consumers in their homes was we are finding treadmills in the middle of a living room. It was a sign of progress. And what people viewed was that, yes, I have now indulged myself, but after I indulge myself, I need to focus on myself. And there is a big concern in the Chinese consumer that if they get sick, they will be left behind, and there is a prosperity that is happening in the country which they didn't want to miss out. And this desire was not just for the higher income groups, but we found it across the socioeconomic groups and across different tier cities. So what we did, we decided then to run a survey to see if we could capture any missed opportunity and overlay that on top. So we ran a survey of 1,000 consumers. And what shocked us was that 85% of consumers were doing some form of exercise like running. On top of that, we asked them a question: if we gave them 10,000 renminbi, what would they do with it? And we thought, they're just going to buy iPhones. And that was completely wrong. The number one expenditure was going to be on sportswear goods. And we looked at where the biggest gap in opportunity was. And it was actually in second, third tier cities with lower socioeconomic groups, the people who couldn't buy your Nike or your Adidas. So what we were looking for was a domestic producer of excellent quality sportswear goods. And where Adidas is spending 0.7% of its sales on R&D, a company like Anta is spending close to 6%. So we identified Anta as a potential stock for us to do the bottom-up work. And that's the basis we form the universe of companies we want to invest in. We identify an opportunity where the trend is going, for example, health and wellness, and then we find the companies that are best positioned to adapt to that. And then we do in-depth bottom-up work. And because we moved away from the relative safety of a benchmark, we believe you need to put a pretty bulletproof risk management methodology behind it. So before we make any investment, we have to write the failure report of that investment. So if you can imagine our work on ANTA, we are bullish on it, we want to buy it, but we also have written our failure report on it.
So you really have given a whole new meaning to the term bottom up. You're not just starting at the company, you're going straight to the consumer, you're understanding their culture, and you're understanding the customers that are buying all the products, asking the questions, doing that in-depth ethnographic, demographic and geographic research, and that then leads you to the true valuation fundamentals.
Exactly. And if you were to sit in a management meeting we're having, where traditional meetings I used to have 15 years ago would be to ask the company to tell me what the trends are in the next 5 years and how they would capture them. We have done the same fundamental work without behavioral biases that they would be doing. So the discussions we're having are on two levels. Here is the evidence we have from all these ethnographic studies. These we believe where the trends are going. Let's discuss how you can capture them. But then at the second level, we go and say, we believe these are your risks. Let's sit and discuss what your risk management plan is so we don't get blindsided and get hit by one of these.
Tassos, thank you. Very different compared to what else is out there. There's no question about that. And certainly the rise of the emerging markets is an area which all our clients need to be invested in from a diversified perspective. I encourage you all to talk to your investment advisor and to learn more about what Trinetra and Tassos are doing, as well as how you can access Trinetra, which is via our Canaccord multi-asset class product. Tassos, thank you.
Thank you.